All right, well, welcome to our third recording in this series throughout COVID. And today's recording is 100 days into COVID-19 and what's changed in development. So thanks everyone for joining us for today's conversation. This is, again, the third part of the series since the onset of really the COVID lockdown. I'm Darcy McConvey, Director of Capital Markets at Greybrook, and I'm again here today with our CEO of Greybrook Securities, Sasha Chuchu. So Sasha, welcome back.
Welcome back, literally back. So I guess, part one and part two were in my home office, and part three is actually in our office. So I guess that's a step forward. And I see by your beautiful background, it's not fake. It's actually...
That's exactly what I was going to say. I say, well, it looks like you're in the office. You're back, and it's not fake. So surprisingly, I don't want people to think that I'm in some virtual world. Like, this is a real, beautiful.
Real. The sun is shining. Things are looking up.
It's great. All right. So today we plan to cover really an update on development now that we're 100 days in, which is wild to think about. It's been 100 days. And some really general themes in the development landscape. A little bit of sort of key insights inside of our portfolio performance and some samples of things that are happening at various stages. So for all three of these episodes or part of the series, we've sort of broken down development into three stages or three phases. Sort of phase one, the planning phase two, construction, and phase three, sort of sales and marketing and occupancy. So we'll do the same today and update in all three of those buckets. And then we'll end with, are we seeing opportunities to buy, and where might those opportunities be, and is now really the time? So lots to cover.
Happy to do that.
Yeah, lots to cover here.
There's a lot to cover. I mean, I think, you touched on it. We're 100 days in, right? So I think as you pointed out, the purpose is to kind of look at what we know. I mean, at the beginning, you don't know a lot. There's a lot of ambiguity. There's a lot of uncertainty. With each day, I'm not going to lie and tell you that it's all clear because
right.
It's not. There's still some uncertainty and ambiguity. But as you see, sort of corporations react, and you see investors react, and you see markets react, and you see, governments react, there's a lot more data points that you can look at to try to kind of, think about the future and even the present and how things might unfold. So I think it's great to look at this 100 days in and see where we are compared to, where we were.
Yeah. And I think, again, it's wild to think that it's been 100 days, but I think one of the things that strikes me most is just of course there's still uncertainty, and there's the phase one, phase two conversation and these things, but is really the resiliency generally. Like, it seems like just quite a resilient market, from public markets now even into, knock on wood, now even into development. There is that thread of resiliency throughout, which is great. It's really good.
Yeah, if I could comment on that, I mean, I think there's two key reasons from my perspective. I think, and obviously all asset classes are different, so there may be some different underlying, reasons in the equity markets versus the real estate market. But I think I'll specifically comment on the real estate market. I think historically low interest rates have been favorable, and I think that one thing that people can agree on pretty much universally is that we're going to enter a period of prolonged low interest rates. And I think that with the government stimulus that has been very clearly communicated by governments around the world, that they're going to continue to provide stimulus to make sure that the economy can kind of have a floor, so to speak, notwithstanding that there's obviously volatility, there's carnage in unemployment. But all of this is meant to make sure that individuals have access to funds and companies have access to liquidity to be able to kind of ride this out. And they've renewed their commitment time and time again. And I think a lot of people look at sort of the piling debt on debt, but when you get behind the numbers and look at sort of the cost on a relative basis to prior years, and you look at some of those numbers, it's actually it's not really costing us as much as it did 5 years ago or 10 years ago. So, there's an argument there for continued stimulus. So I think that's one of the reasons that we're finding some optimism. And then in the real estate market, more fundamentally, we've always spoken about the fundamentals of our markets, and we're really seeing that there's a renewed sense of confidence in the fundamentals prevailing over time. And, we'll touch on that a little bit later, but I think that you got to play the long game in real estate. It's not a short-term thing. And when you do that, you have to look at today, you have to look at history, and you have to realize that nothing's permanent and markets do respond. And when you're making investments, you're often thinking about the future more than you're thinking about the present. And for those reasons, I think there's a level of confidence there that, at the surface might look almost nonsensical, because you're seeing, quite active markets, and you're seeing, some very positive signs. Yet when you're looking at what's happening in the world, it would kind of look to be contrary to that. But the market is a forward-looking mechanism, right? So when you're buying today, you're not thinking about what happens next week. You're thinking about what happens 2, 3, 4, 5 years from now. That's a very different set of circumstances that you have to take into account.
And I think now that there is more certainty around the conversation, or more certainty is right, not total certainty by any stretch, but this idea of that it's a forward-looking market and you're buying sort of today for a return tomorrow. I think we'll get into that in more detail, but I think that applies to development very much so, almost more than anything, especially in longer term development. So that's something we'll for sure hit on in a little bit. So flip back to kind of the 3 stages. Stage 1 being planning. And I was just chatting with sort of our director of asset management, and about 40 to 50% of our projects, I should know that number, but he clarified, but 40 to 50% of our projects are in the planning stage. And so, when we look back at some earlier episodes, we discussed that most municipalities switched to this idea of remote working. We're still able to make progress, although slower than typical. Still a little bit of uncertainty there, and each municipality kind of dealt with, departments and documentations differently, but stuff was still getting done. So, what's the status of sort of the planning environment since our last conversation, and are we any closer to a new normal, or is this the new normal?
So let me try to answer the question this way. I think, we talked about variance in municipalities, and we talked about some of the measures that were being taken. The common kind of thread across the board is sort of a level of priority, right? Where municipalities have looked at their involvement in processes and really having to focus on the things that are most critical to delivering homes today or in the near term, right? So when you're looking at something that it might be 5 years away, like a planning application, that tends to be graded lower than, your above grade permits. And even those are graded lower than occupancy permits, for example. So municipalities across the board have had to, really prioritize their focus, because notwithstanding everybody's working, it's still not 100% efficient, and it can't be 100% efficient. Candidly, from my vantage point, the fact that we're 70 or 80%, and these are just sort of nebulous numbers that, I'm not doing a mathematical calculation, but my gut's telling me we're about 70, 80% efficient, is like a small miracle, right? And I think it's taken a lot of coordination. I think it's taken a lot of accommodation and flexibility on both the parts of the development community as well as on the part of the municipalities, and it's working relatively well. For us, we have made some submissions in the new sort of online format. Yorkville, we had made an initial submission, a couple of our West End projects. So, it's moving forward as well as one could hope in the current circumstances. And I think, the credit has to go to the municipalities for the way that they've reacted and tried as best as they could to keep a sense of normalcy. Our consultants and planners and everybody's working normally as they would, not physically at the office, but we're collaborating. We're all set up to do that. Zoom has become the new normal, and we're getting things done. So I think, it'd be naive to say that there isn't going to be impact from a time perspective. It's just not, flat out not moving as quickly. But at
Right.
the same time, progress is being made, and all else being equal, that is an important thing to know. When it comes to sort of overall construct planning, the biggest change that was made initially when lockdown orders started is, notwithstanding cities were open and notwithstanding everything I just said about priority, there was one main fundamental change, which was around the statutory requirements for municipalities to respond to developers in applications and permitting context. They were kind of removed, right? So everything's open, but at the same time, we can't promise that we're going to get to you within the regular specified timeframes that exist. And that was kind of during the emergency order. As of last week, those have been restored, right? So when you think about kind of the new normal, we're trending the right way, right? Because now, as you look at sort of, it's been working and it's been relatively efficient. Now we're starting to say, okay, we're going to reintroduce those guidelines or those parameters so that developers can have certainty in knowing that, they're going to be responded to accordingly. And again, the priority scale still exists, so there has to be some flexibility there. But by and large, it's starting to resemble normalcy for the most part.
Yeah, that's great. Like, you mentioned a few of those groups for like Chief City Planner and Build, an industry group like Build really pushing it forward was also, pivotal, I would say. And I think when we think about the sales sort of bucket in a little bit, this idea of, having to implement technology to make it even 70 or 80% efficient. Now, when you have sort of the policies reinstated and people back to working at 100%, like the hope again is that technology makes it even that much more efficient going forward, right? Like in a lot of industries, they've said they've leaped, 3 to 5 years. They've advanced technology because they've had to, and hope that applies here too, right?
I don't know how I'm going to go back to a conference call, like, to be honest, right? Like, so as somebody who is kind of a technology neophyte, using Zoom, for example, which is a very simple technology, but it's been tremendously effective in being able to connect and continue to move the ball forward on a number of fronts. You mentioned sales and marketing, and, maybe that's another thing we can talk about.
For sure.
I tell you that in March, kind of the latter half of March, where uncertainty was a lot higher than maybe today, and certainly, again, maybe I'm using the wrong word, uncertainty, because it's not like I'm sitting here saying, well, I know what's going to happen over the next 30, 60, 90 days with regard to this pandemic. What I mean more is just having more data points and more palpable information about what people have been doing and how they've been reacting and sort of how markets have gone. I tell you that at the beginning, I was very doubtful about our ability to move any project that's in a sales or marketing phase forward, for obvious reasons. I mean, like, people are locked down in their homes and nobody knows what's going to happen and those things.
Yeah.
I think as people have gained a little bit of comfort and confidence, both with our general, our society's handling of this pandemic and people adjusting their behaviors and things like that, time has given people a little bit more clarity and context. And as a result of that, people have returned to the market. And in April, we started to see people starting to buy in some of our projects in Oshawa and in Markham, where people, where we had open sales centers, albeit not physically open sales centers, but the ability for a broker or a customer to call and say, hey, I'm interested.
Yeah, and get the deal done, right?
Get the deal done. And our development teams were very quick to adapt to sort of a digital realm where, all of our marketing materials became digitized overnight, where, virtual tours, brochures that are virtual, literally conferences with the sales agents that are virtual. Obviously the paperwork and documentation similar to how we do in our subscription agreements, went to DocuSign. So
Sure.
everybody mobilized very quickly to be able to accommodate those customers that were interested in buying, whether they're investors or end users. And we started to see, people dribbling in and buying, right? Whether
Mm-hmm.
they be in condo projects. Similarly in the United States, where we have rental buildings under construction, we had just completed the construction of our first tower in Fort Lauderdale, and we had started our pre-leasing. And frankly, we're exactly where we thought we would be
Yeah,
in
that's
terms of
incredible.
our, yeah,
You know what?
like, I mean,
That's additionally incredible is because a lot of people suspected that. So Fort Lauderdale, for context, for people that may or may not know, is this idea, or part of it is co-living, right? And so a lot of people thought that would be hit very hard, which I guess was logical, and it's done incredibly well. And now that people have signed leases and are moving in, you're getting more of the old selfie in my unit, check it out, friends, and it's almost taking on a life of its own in terms of leasing velocity. So like it's done phenomenally well. And for additional context, maybe you can tackle that point. For people that, may or may not know, probably 20 to 30, 35% of our projects are in sort of the sales and marketing sort of bucket today. And one being, obviously this Fort Lauderdale project you're talking about.
yeah, so I agree. I mean, like, we've been very pleased with the direction it's gone and how well we've been doing. And it's a testament to our team down there at PMG. They've been extremely proactive digitally with social media strategies and other digital strategies. And then, as you said, now that people have moved in and occupied, now they see the quality of the product. Like we're a premium product, but not at a premium price.
Yeah.
And that becomes very evident. And when people go and move in, they're like, holy crap, like, I'm telling my friends, and that started happening, and we've seen kind of a further spike in interest. So all of this to say that whether it's Fort Lauderdale or here in Canada, development teams were innovative. They didn't just sit there and say, okay, well, there's a pandemic, what do we do? We had 1,000 calls, and it was business as usual talking about launch. The only difference was it's not a physical launch. Like, we're not
Sure.
going to have the same sales center and all that kind of thing. I mean, we will ultimately, but at the beginning it was really digitally focused, and the results have been generally pretty good.
Yeah.
I'd
Well,
say,
even on that, like if you flip gears um, to sort of York region, we recently just had a townhouse launch, and it went tremendously well. And in addition to it going, very well, a lot of interest is the process is enjoyable, right? Like
yeah,
it's not just, I kind of think about it will become the new normal because it's convenient for the buyer, right? Like it's on their time. You don't have to schedule a walkthrough. I think about, when I go to physiotherapy and I have to book it, I have to walk there, I have to wait, I have to get treatment. I don't go often, by the way, just if I do. Then you got to walk back, and it carves up like hours in a
a lot
day.
of time.
Right? And now you've got this almost fully digital process, like you talked about, documents, virtual tools, renderings, and it's on your time. You can go back and check it out. Like it's a pleasant experience and easy, which makes, which really helps, especially today.
Agreed. I mean, like, I think, listen, there's the facilitating of business, which is what you're speaking to, and I think that in many ways it has become an enjoyable process, and at least something, at the very least, if not enjoyable, certainly not something that people see as deficient. Like, they're getting everything they need.
That's right.
And then of course, to see the model suite, you can make an appointment, appropriate social distancing. Like, so that stuff's happening as people get down the line. So like, you're getting to do all your shopping kind of virtually. And then when you're ready to buy, or you're ready to get to that point, we can make the necessary arrangements. But I think overall, when it comes to sales and why they've been strong, kind of across the board, and it's because, again, speaking to that point of, it's hard sometimes to extract yourself from the today, right? And as an investor, that's kind of what you have to do. Like, you're not really, especially in development, where it's not, I'm deploying my capital in a piece of dirt, and in many cases it doesn't look that great, and the neighborhood's just starting in some cases. Even in a condo project, we're in the stockyards, for example, out in the West End, and that area has evolved and has become a very strong area. But when we first got there, you're like, oh, why would we do a development out here? But it's always a forward thinking thing. So I think as people understand the context of what they're buying and occupying in a year or 2 years or whatever the case may be, I think generally, if you look at sort of sentiment from major bank economists and other economists, from the most optimistic to the most gloomy, everybody's looking at the fundamentals of our market as being strong, intact, and they will recover. The question is whether it's a 6-month, 12-month, 18-month, 24-month recovery. And
Sure.
not to say this flippantly,
Yeah.
but when I'm buying a development and there's a planning phase and there's a whole, whether it's 6, 12, 18, or 24, it's almost not that relevant to me, right? Like I have to think about what the world looks like when things get back to normal, when immigration and mobility start again.
Yeah.
When people go back to work, go back to school. I think, the media has something to do with a bit of an overblown narrative, if you ask me, about, people not wanting to go back to work and not wanting to go back to the office. As an avid Zoom user today, who has had a couple of in-person meetings in the new normal, it's very hard. People can feel they're efficient when everybody's on Zoom because we're all looking at one another and we're responding to one another. When you're like the one guy who's on Zoom and 6 people are in a boardroom, you're very neutralized. It's very difficult to be part of that conversation. So I still think that people need that human interaction. And I don't think offices are going away anytime soon. And I don't think that schools are going away anytime soon. So, from my vantage point, I think the future is as bright as it was going in, minus a hiccup. And I'm not trying to undermine the gravity of something like a global pandemic. And I'm not suggesting it's a hiccup. And I mean, obviously it's a very serious set of circumstances that we're dealing with. But you have to kind of look past that if you believe in your macroeconomic thesis, which is something that we have and will and continue to believe in for all the right reasons. So, kind of that's why sales, to me, it's not really all that surprising, although I'm pleasantly surprised 100 days in.
Right. Yeah. Like we'll get into sort of opportunity, and this ties to it. I want to get back to just construction and then back to where we are right now with opportunity. But yeah, it's the idea of COVID maybe being again, not in a flippant way, a temporary interruption. If it's a 24-month, call it back to normal, and in what we think is a long case, 12 months, 24 months. Imagine a development where there's a year and a half of sort of planning and approvals. Then you've got, you've sort of bucketed in for a year in sales, and then you're building it. Like it's not 4 or 5 years out anyways, right? So it totally is investing in tomorrow today, even though, your frame of reference is today, which makes it hard to invest at times. But I think people are getting that.
I hope so. I mean, like if you think, one of the things just generally you asked me about kind of post-COVID, we just had a reporting cycle. If you think about, generally real estate, as I said, it's a bit of a long-term game. And the one thing that's really difficult in dynamic markets where planning changes and then, your friendly neighborhood pandemic happens and or the government comes in and changes the rules of engagement, whatever those things are, they cause some immediate term consternation. You have to sort of recalibrate your strategies. Many of these things have an impact on timeline. So I know, a sense of frustration sometimes people have is looking at sort of timelines and saying, man, I thought it was going to be this and now it's this. That's something that, obviously I'm not by any stretch of the imagination downplaying the importance of, those milestones and sticking to those milestones. But sometimes they become a little bit discombobulated. And part of what we have to do is adjust and sort of read situations and make decisions in a real-time basis to be able to kind of move things forward, understanding that there's going to be some variability there.
Yeah.
But ultimately, if you look at any chart over the past, 20 years in a place like the GTA or other markets we operate in, the trend line is very positive, right? So you have to kind of look at it from that perspective. And I know sometimes it's hard, but that's an important discipline as an investor that you need to have,
For sure.
to be able to understand that the very factors that contribute to difficulty in milestone planning are the same factors that are contributing to the scarcity,
And the
which
value.
ergo are the same factors that are pushing
Yeah.
value, right? So there's those trade-offs that happen, and you know, we have to do our best to balance them. So, you know, when it comes to COVID, it's just another thing that you know, you have to deal with, and of course there's impact. So
Sure.
if you see in our reports, you know, it was a March reporting cycle. So what we did was we tried our best to give people some context into what was happening, even though it was a March reporting cycle, because, you know, naturally people want to know. There weren't a lot of answers because, you know, even today, as we sit here today, notwithstanding everything I've just said about the trends and things that we're seeing, there's a lot of work that goes into, like, you know, the sausage making to get to the point where we have some definitive conclusions. So,
Hmm.
you know, I think, you know, people, I hope, can be patient with that. So whether it's planning or sales, we're seeing all the right things, and I'm very encouraged by those things given what's happening in the world today, and you know, I'm very positive about them. You know, you mentioned construction, so that's another
Yeah.
area.
Let's take it to construction, and then maybe what, you know, where we see light. Not that we
Sure.
don't in these other areas, but you know.
I see light. I see light all behind your head
I know.
and everywhere
Beautiful.
else, because that's a very nice view.
I'm just trying to wrap it up so I can get out there in the sun, right?
So construction is something that, you know, was deemed an essential service from the first day of lockdowns and sort of social distancing measures. So,
Yeah.
notwithstanding that, I think what people have to appreciate is, okay, great, it's an essential service, it can continue,
Mm.
but you have to create protocols. Like the normal changed. So it wasn't as simple as, okay, I guess tomorrow everybody show up to work and it's business as usual because we're an essential service. There was a tremendous amount of planning, a tremendous amount of consultation with health and safety officials and government officials and consultants to make sure that construction sites were safe, to make sure that construction sites had the appropriate social distancing measures put in place. Depending on what it is that you were building and where, that meant different things. So if you think about a high-rise building where you haven't enclosed the building and you're still building the skeleton, that process could move on a little more efficiently, right? So you were kind of at the 90-ish% efficiency, because generally people aren't in close proximity except for maybe on hoists and lifts. So you could have and maintain social distancing and do it still rather efficiently. Whereas on the other hand, when you're building a low-rise home and you're at the finishing stage and you have the cabinet guy and the plumber and the electrician all within a confined space, that became more challenging and less efficient, obviously. So depending on, again, on what you were building and where, there was some variability there, but generally everything moved forward and generally everything was being done. And we were pleased with how things went across the board, like whether it's in the United States in our projects in Miami, or whether it was what we were seeing here in the GTA and the Greater Golden Horseshoe. Like, we were very pleased with our teams, our execution teams, and what they were able to accomplish.
Given the circumstances. Now,
Well,
it is interesting to see, you know, the the progress in the US, and like, we've made a ton of progress in Canada. I'm not saying we have not. We definitely have, but you know, in the US, it's like zipping along almost unaffected. In, you know, particularly, one of our Miami projects, well, all of them really. So that part to me is quite interesting. And there were some starts and stops, right? Like, you know, you put the processes and protocols in place, and people are on site doing the best they can, you know, following the guidelines, and all of a sudden there's a case on the site, and you kind of have to shut it down for a day or two, and to sort of clean it and sanitize it, and then come back. So this kind
right.
of stuff has happened, but it's moved, all in all, it's moved on really tremendously well.
Agreed. And to that point, so I was going to touch on that. It's, if you think about 100 days ago, if somebody had symptoms, it was like, oh my God, what do we do? Like,
Yeah.
does everybody go home for 2 weeks? Do we shut it down? You had sub trades that were like, I'm pulling all my people from the site, because I mean, there's no playbook for this, right? Like it was just,
Exactly.
like everybody was doing their best to try to figure it out and be reasonable and safe, right? So then you fast forward 100 days and you've had a couple of these stops and starts, and you develop protocols and you develop best practices and you develop that playbook, so to speak, so that when you have an issue, exactly how it needs to be dealt with, exactly how people need to be informed, exactly how you need to deal with and sanitize the site, and how to get back to work, because there's a general intent and a general willingness for people to be at work and
Yeah.
to move things forward. You're delivering homes. It's as essential a service as anything, with the exception of obviously healthcare and our basic need of food. But this is pretty darn close.
Sure.
And the effort across the board from our builders, development teams, municipalities has been relatively coordinated to try to get things done. We've had to call on some of our relationships at the provincial level, at the municipal level at times, to be able to try to accelerate things, especially in the early days. We had an example with our projects in Garrison Point and Playground, where we were at the occupancy stage, and then all of a sudden the city shuts down. And of
Yeah.
course, nobody knows what that means exactly, and who's still working, and how does it work, and can you physically go to the site and do an inspection? So you get this call of, yeah, the inspection we were doing next week is canceled. And then you're like, well, hold on a second. We need occupancy permits because people are waiting to move in. So you don't just sit there and say, okay, great, I guess you're going to call me when things open again.
Yeah, you go get it.
You go and we went to the mayor's office, Mayor John Tory's office. They did they got back to us. They were very understanding of the situation and very much, okay, how do we figure it out? You're right. People do need to move in. You're right. We need to get some occupancy permits. So we need to get an inspector out there. How do we do that quickly? How do we do that safely? And then obviously we got it done. So, I think that overall, I have been as pleased as you can be given the circumstances in construction. And so far, I'm knocking on, I have a wood desk, so it's official, but, I knock on wood that this continues and stays as it is, because so far, it's been a very manageable process.
Is it bad luck if you knock on a non-wood desk?
I do it all the time. I think it's okay.
Yeah. So you're still here. Okay, that was a great summary. And so then to kind of round it all out, there's a lot of interest on, one with how's Greybrook doing, and we've talked about we're slowly trickling back into the office. We are both currently in the office. But then when you think about the market, there's lots of chatter in the market. Is it a good time? Is it a bad time? Is it going up? Is it going down? We just hit on the idea of, investing in development, or COVID itself, almost has to be a temporary interruption. It's a matter of how temporary. And then you think about where the condo market was before this hit. So I just read an Urbanation statistic where, the low supply has pushed average asking prices of unsold condo inventory in Toronto to $13.58 a square foot. So this is Q1 statistics this year, 2020, a 5.8% increase from April of 19. So, that's massive. And so there's got to be, one that's, some people would say it's expensive, but also it would lead me to think that there's got to be value pockets. So can you speak to sort of where as a team we're looking for opportunities and acquisitions, if we are?
Yeah, you teed me up really well, like you don't know. Yes,
Yeah.
we are, says our director of capital markets.
No, I can't answer that. Sorry. Next question.
So no, I think, don't want to be repetitive. So the theme of sort of forward looking, I think is a common thread to everything I'm about to say. But, I believe that the fundamentals of this city, and more than the fundamentals, the dynamic that exists, right, between supply and demand, and has existed for a long time. We have some very significant supply constraints, and those continue. And just because we have temporary dislocation, whether that be, students who aren't going to school, or typical international, folks that are coming to the city, whether immigration or students on temporary visas, whatever the case may be, it doesn't mean that all of a sudden we have an oversupply, because we didn't have enough supply to begin with.
Right.
and we were nowhere near meeting that supply. So when
I think
people,
that's a hard thing sometimes for people to wrap their heads around is like, well, what do you mean there's not no supply, right? Like it, and
honestly, like, again, at the risk of just, almost sounding a bit flippant, like, I get it, and I hear that a lot,
Mhm.
but the numbers are the numbers. Like, that there's just a certain capacity, there's a certain number of units that are being delivered, and the amount of demand is far in excess. So you're going to have that upward pressure. And listen, I'm not ignorant to believe that you're not going to start to see potentially, with 6 more months of lockdowns. Not saying that that's going to be the case, but if we saw continued sort of frustration in the economy and sort of with this pandemic, you're probably going to see things pull back a little bit. But that doesn't, again, change the fundamentals. Like we saw this in 2008,
Yeah.
7, 8, 9, I guess 10 maybe, for a little bit, where the financial crisis also caused a dislocation. Like people have short-term memories, so nobody remembers exactly what happened, but I do. And we bought properties in 2007. We were kind of moving them through a planning process. Some of them had open sale centers, and then all of a sudden 2008 hits, and nobody knows if the banks are going to exist, let alone be there to provide loans and mortgages and all that kind of thing. And of course, people with their stock portfolios that all of a sudden were halved weren't feeling so wealthy to go out there and buy condos and make investments. So you saw a major pullback in the amount of velocity in pre-construction and even in the secondary market through 2008 and the first part of 2009. As people sort of acclimatized and the economy started to recover, there was record sales velocity in the condo market. All that told me, at a statistical level, and I don't have the charts in front of me, but obviously we've done analysis like this, is exactly the number of people that should be buying every year just moved their purchase over here. And all of a sudden you had twice as many people buying in 2009 and 10 than you did because you didn't have as many people buying in 08 and 09. So really, it was just a shift in demand and a shift in timing. Because again, not saying this ignorantly, this doesn't happen in every market. This doesn't happen all over the world, where there's more of an equilibrium between supply and demand. But where you have this disparity, it's just a shift that happens. Now, if all of a sudden we magically snapped our fingers and 45,000 new units came to market delivered, okay, well, the dynamics would be different, right? But that's not what we're dealing with. And we're dealing with a very scarce inventory and very scarce pipeline by relative context. And at the same time, we're not having 100,000 people move into the GTA this year. But at the same time, our federal government has a very long dated mandate. This wasn't, when they set their mandates for immigration, it's not a 2020 thing. It's a, what's the next 20 years look like? And what are our targets over the next 20 years? So there's plenty of time to make up those numbers. And frankly, I personally am a firm believer with all that's happening in the world. Canada continues to look good. We continue to look good with how we're dealing with pandemics. If you think about some of the social unrest that is happening today, we even protest politely. And I think, frankly, this is what Canada's all about. It's about tolerance. It's about people that are just a place to live that has a great reputation globally. And I think that that's only going to draw more interest and more people. And to my earlier point about where investment dollars are coming from, we obviously have our base here and it's great, but the foreign interest is starting to come back quickly because people are looking to deploy capital, and they're looking at places like Hong Kong where there's some unrest, and they're looking at other places around the world, and they look at Toronto and they're like, man, I liked it before, I really like it now. And I get it. It's not a this year thing. It's the next 10-year thing.
Yeah.
And this is where I want to put my money. So there's an almost not surprising amount of demand. And how we responded to that was to try, as you said, to try to find the right pockets. And for us, what that means is our core thesis of urban core high rise is very intact, because for all the reasons I've just talked about, right? It doesn't just go away. And then within those things, you start to see other places where you can find relative value, right? Where it can appeal to a broader range of people, where maybe the price point is a little more affordable. Not to say that over here it's not affordable, because there's different segments to the market. And
Sure.
by the same token, where you can sit there and say, okay, well, somewhere outside of Toronto or somewhere on the periphery, it's cheaper, so people will gravitate there. But you know what? There's also more supply because it's very scarce in the core. So yes, it's more expensive, but there's also way less availability. So all of this to say that, our thesis remains very intact on the high-rise side.
Hmm.
And then on the low-rise side, I know I got to stop talking here because you're gonna.
Well,
You're
like
gonna cut
just
me
on
off.
that high rise side, like core for sure. Like we talked about, obviously, you make money on the acquisition, so you have to be thoughtful and strategic about what you buy, because it is competitive. But there's also these pockets, like maybe east on sort of Danforth. There's pockets in like the Queensway. We've done quite a bit on the Queensway. Pockets like Stockyards, Upper Junction, areas that are gentrifying, still connected to transit, and price points are, in some cases, $200, $300, $400 a foot less, right? Which is material.
Yeah, like I agree with you. I mean, I think, look, those are the relative value pockets that I'm sort of talking about. I think, again, it's important to understand, and we say this to all of our investors, it's about diversification, right? So I think that as an acquisition strategy, we have our thesis around urban core, we have our thesis around low rise, we have our thesis around our relative value, periphery, as we'll call it.
Sure.
And the best thing for people to try and achieve is balance in that portfolio, because as I pointed out, it's a different product for different target market who are affected by different parameters, right? So if you think about within a pandemic like this, at this point, there's been a disproportional sort of headwind in the service economy, restaurants,
Sure. Look at your
hair
hair.
salons,
Look at your
things
hair.
like that.
That's
Look at my hair. I have to glue it to my head. But it's a disproportional sort of effect.
Yeah.
And there's other parts of the economy that haven't been dislocated to the same degree. So depending again on the price point, it services a different individual who's affected by different macroeconomic variables. So it's important to kind of find those points of diversification. And on the high rise side, it's all about urban for us, and it's all around finding the right value for the right market that we're trying to attract. On the low rise side, I think I'm seeing something a little bit even more exciting, to be honest. And we're looking for low rise. We haven't found the right opportunity, but the pre-pandemic, the previous administration here in Ontario had put a fair housing plan together that really kind of dampened demand and interest in low rise housing. And we won't dissect whether that was the right thing to do or the wrong thing to do, but of course it caused the market to kind of drop by, in some cases, 20% in the low-rise housing market in different parts of the GTA and Greater Golden Horseshoe. Obviously, we've had projects on the low-rise side that have borne the brunt of that because of timing and things that have happened. But what we're starting to see is, again, that pent-up demand. So the government came in, a bunch of changes, sales velocity falls, prices follow that because that goes with sales velocity. But then there's a pent-up demand. And then what starts happening is all of a sudden, we do a project in New York region, we do a launch, and there's a tremendous amount of demand right in the middle of a global pandemic. So you're starting to see this pent-up demand happen. And it's going to certainly positively impact the projects that we have on the low-rise side, because you're going to start seeing, those revenues climb back up potentially.
For sure.
And then also, it's having a different impact in new acquisitions, because as today you're looking at the market, I see a lot of upside from here because we're still kind of at a baseline pricing after the dip, and you're acquiring your land based on those metrics. Yet at the same time, remember, 2 years worth of low sales velocity means less construction. And as a result of that, you're starting to see some of the pressures we saw from the building frenzy, where costs were escalating at sort of higher than historical levels. All of a sudden, they're starting to taper a little bit, right? So you're entering this period of time where revenues are starting to show more upside in them and costs are starting to mitigate, and that's obviously helping margins. So from a timing perspective on the low rise side, this is a really good time. And
Yeah.
I know it sounds maybe silly to somebody who's, from a different place that's maybe watching this webinar, doesn't know anything about the GTA, doesn't know anything about a thesis, and they're listening to a guy in the middle of a pandemic talk about the fact that this is a really great time to be buying things. But it is. And those are just the facts. I mean, it's a forward-looking market and the fundamentals are intact. And, we're not ignorant or naive to the fact that we don't know the answers. And if things got really, really bad or much, much worse than what we're seeing today from a pandemic perspective, then listen, like, we're going to have to make adjustments. But that's where what you buy, what you pay for it, how much leverage you use are all big factors that allow you to basically put the cocoon on and sit there and wait if you had to, until things are back to normal. So I think it's a defensive acquisition strategy, but at the same time, pricing in the appropriate, not optimistic, not conservative, but the appropriate amount of forward thinking in terms of where the markets go.
Yeah. I like, as you're talking about the margins, it makes me think about like it mirrors sales, right? It's this ebbing and flowing. And now it's kind of in one of those periods where it's going to sort of hopefully open back up is kind of what you're seeing, which is interesting, right? It's a good way to visualize both those sort of different ideas and concepts because they sort of mirror each other in a way.
They do. And they have always historically, but they lag. Right? So what sometimes if I drew a chart for you, revenues go, costs are okay, but then they start to go with those revenues because everything you sell today, you're starting to build over here, right? So those are the things that you have to kind of think about. Now, conversely, when all of a sudden sales velocity has been lower for a couple of years, it goes the other way.
Yeah.
Right. And then that's why you're seeing that dynamic. And that's something that we're very in tune with because we've been doing this, since 2004. And we've seen these cycles. So notwithstanding that a lot of people think that Toronto hasn't seen volatility in cycles, well, we have. In 2008, 9, in 2011, we've had volatility in this market, and it causes you to have to step back. And that's the whole point of, we always talk about active asset management. That doesn't mean that I'm running on a treadmill while we're looking at Excel files. It means that we are actually sitting there and looking at every project and putting together strategies and changing things when they need to be changed. It's a very dynamic process. That's why at the beginning, when we talk about deals and we show kind of a timeline, whenever I talk to people, I say, look, this is the timeline. These are the milestones. This is the only logical way that I can tell you the linear process of development and what stage goes before what stage and how it all works. All bets are off to a degree when you're going through the process because you have to be adaptive, right? Otherwise, you're dead in the water. It's not a reactive thing. It's a very adaptive thing in the sense that, you have to be on top of it. And that's what we tried to do ultimately.
Yeah. I think that's one of the big differentiators that we just generally pride ourselves on is this idea of active asset management. The treadmill, well, that's the first time I've heard you say that. It got me a little bit. But you're right. Like it's just smart people going to work for you every day. And they know the development game, which we've talked about is a complex game with a lot of different facets, as well as good as anyone, I should say. So, and they're in there sort of in the weeds day to day, working on our behalf. And that's a critical component, I think, that oftentimes gets sort of missed when people just see what we do on the surface. And it's really, everything at the end of the day.
Well, it gets missed because people just see you sitting in front of a screen with a beautiful background. So they assume that you just sit in your throne all day.
I rented this place.
But I assure you that you don't.
Yeah. Okay. Well, conscious of time, so we'll wrap it up. But that was a great recap of, again, planning, sort of what themes we're seeing in reporting, construction phase, sales, kind of the new normal, and how we're progressing forward. And we're cautiously optimistic and see some light here, which is great. We believe in the markets that we're in, and we'll continue to believe in them. We're there for a reason, and so we feel good about it. And our team.
And let's hope. And let's hope we're not doing a 200 days into COVID webinar.
Yeah. Yeah, no kidding. Your hair would be really bad if that was the case.
Well, yeah. I have a lot of glue.
So send us questions and feedback for investors and listeners. Love to hear from you, and we'll continue to provide these sessions throughout. Hopefully we can see some of you in person relatively soon here, but most importantly, again, thanking the frontline workers, grocery stores, civil servants, healthcare, nurses, doctors, that have done a great job, and we're thankful to that. So appreciate
Agree. And
everyone's
I'm gonna throw construction workers in there too,
yeah,
because
good.
they're, people don't see the acute nature of delivering housing, but let me tell you, it's an acute thing. And these people from the first day have been on site. They've done everything that they have had to make sure that people, get to where they need to go. And I thank them as well.
Yeah, good call. Great point. So on that note, thanks, Sasha, and we'll be in touch.
Okay. Thanks, everyone.